Good morning, traders from whichever side of the country world you're watching me from. Welcome to today's morning market call. My name is Ian Joseph, lead market analyst, HFM East Africa. Now, quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but don't worry, I'm here to help you comb the market in the right way. Now, starting us off with where we usually begin. Did you hear about the Shield 500 account? Yes. In the spirit of 15 years in the marketplace, we are providing new traders with the opportunity to open a Shield 500 account. Now, this account is very interesting, whereby if you deposit anywhere between $100 and $500 and trade within the first 25 days, whatever losses you incur, we shall refund it to you. Very interesting. Go over to the website, check it out. Now, we do have other promotions that are currently running, and if I could just highlight some of them, whereby if you go over to your HF website, once again, under the promotions, we do have all the promotions currently ongoing. I want us to talk about the pure gold giveaway, whereby you have a chance to win pure gold. Trade and win gold. The competition did begin on 8th of September. It's going to conclude on 8th of October. You still have 15 days. You can register here. Now, how do you claim these? Win 10 grams of gold. Go over to your HF under promotions, the pure gold giveaway. Join the promotion, trade 100 standard lots in gold, then hit the target and win a chance to get 10 grams of pure gold. We are going to have unlimited winners on this promotion, so it doesn't matter how many people are going to win. They're going to hit the target over 100 lots. Once again, go over to your HF website under the promotions, join it, join the pure gold giveaway, and then trade 100 standard lots. Now, we also do have Battle of the Elite, whereby you have a chance to become Kenya's Dawn or Bizu, claim the crown, win 650,000 Kenyan shillings. The competition is going to run for 1 month. Number one is going to walk home with 650,000 Kenyan shillings. My lord. Number two is going to take home 260K. Number three is going to walk home with 130,000. We are going to have 10 winners in the lucky draw who are going to walk home each with $200. Now, once again, all made possible by HFM in the spirit of celebrating 15 years in the marketplace. Now, let's get it on to the morning market call. Whenever we wake up in the morning, the first thing that we need to be looking at is the economic calendar. Now, if you go over to your HF website, everything for you as a trader that you need is on the HF website, okay? Now, under tools and education, you do have the economic calendar here under news and analysis. So once again, when you go to the HF website, under tools and education, you do have the news and analysis. If you do click on the economic calendar, this is going to pop up, the best economic calendar that you're going to have. Welcome, welcome. Let me give out a shout out to Saint Kenya. Well, congratulations for being the first one to join. Hello, Christina. Beautiful. What about the Kilifi trade event? I'm going to talk about that in just a moment's time. Now, when you wake up in the morning as a trader, you want to start generating ideas. What are you going to be looking at, okay? The economic calendar is the best place to start, whereby you're going to anticipate volatility even way before it does happen. How do you do this? I'm here to take you through. Let's take, for example, Australia dollar. They did release the S&P Global Services PMI earlier on in the day. This was exactly at 2 a.m. in the morning. Now, this is very important. Today, as per the title of this video, you're going to look at PMI data. And what is PMI data? This is Purchasing Managers Index, which is released on a monthly basis by the respective sector, which is a leading indicator of gauging businesses' activity in that said economy. At this particular case, we are looking at Australia. Now, the data is derived from surveys of senior executives at private sector companies from the services sector, okay? So if it's going to be PMI, it's going to be Purchasing Managers Index, okay? So this is the services, then you do have the manufacturing. And then if any, in the current month compared to the previous month, and can anticipate changing trends in official data series such as GDP, employment, and inflation. A reading above 50 usually indicates expansion, meaning the economy is growing, while a reading below 50 usually indicates the markets are generally declining, which is seen as bearish for the AUD. Now, whenever you're looking at data, especially fundamental news releases, we do have two sets of data. You have leading news releases and lagging news releases. Let's say, for example, when you look at employment data, let's say, for example, NFP, it usually has volatility, but when looking at unemployment claims, which usually come out every week, I do believe it's going to come out tomorrow, these are seen as lagging data, because if someone loses a job today, you're not going to go broke tomorrow. So it's going to take some time for it to be reflected in the markets. But when you're looking at businesses, especially the PMI data, this is leading data. Why? Because they're going to look at these companies, these big companies that either offer services. So with PMI, we're going to see two of them, services, and then we're going to see manufacturing, okay? Now, they're going to ask these companies, these big companies, how do you feel about the relative level of business? Do you guys have products currently at the moment? Are you producing? If you're producing, are you selling those goods and services? Let's say, for example, looking at employment, these companies usually employ a lot of people. They ask them, are you hiring people or are you laying off people? Now, this is going to affect price action in the near future. Why? Because businesses are the first people usually to react to market conditions whenever there's uncertainty. If these people say that, okay, we are heading in the right direction, it means the economy generally is headed in the right direction. If they say that, okay, we have been laying off people, we do have inventory, but we are not selling them, it means that the economy generally is headed in the wrong direction. Now, looking at this information, data above 50 is usually seen as expansion, meaning the economy is generally growing, which when you look at it, it's going to reflect positive on that specific currency. Now, if you look at it, if the data comes out below 50, it means that the economy generally is declining and is seen as negative for that specific currency. Now, looking at the S&P Global Services PMI, this was for the Australian dollar. As you can see, this is medium impact, okay? Whereby the previous number was 55.8, the data actually came out at 52.0. Now, it's lesser than the previous number, but it still shows that the economy is generally expanding. Now, if you click on the read official report, it's going to take you to a new tab, and this is the official document that was released at that specific point in time. As you can see, this was 2300 hours. This was Australia time. In our local time, this was 2 a.m. in the morning, whereby, as you can see, businesses activity growth did slow in September compared to the previous number. Now, Australia's business activity softened at the end of the third quarter, according to the latest flash PMI data. Now, the weak expansion of output was driven by a slower rise in incoming new orders, attributed partly to a renewed fall in export orders. Now, businesses' optimism also fell to the lowest level in a year. That said, firms continue to hire at a solid pace to cope with the ongoing workloads and to clear existing orders. Now, very interesting. Yes, the economy has softened, but they have been continuing to hire people, which is good because these people are going to be paid money and they're going to spend that money. As a result, more money is going to be in the economy, generally strengthening the Australian dollar. Now, on prices, average input costs continue to increase at an above average pace, while selling price inflation eased slightly in September. Now, the headline seasoned adjusted S&P Flash Australia PMI composite output, very long name, but this is the name of the document, posted above the 50%, which is good, no change mark for a 12th consecutive month to signal an expansion in business activity. Yes, the economy has slowed down compared to previous months, but this is the 12th month that we have seen data coming above the 50% region, the 50 region, which is seen as expansion. Now, at 52.1, which is the actual data, down from 55.5 in August, the latest reading was the lowest in 3 months. Very interesting, and signaled only a modest expansion in activity. Now, by sector, output growth softened across both manufacturing and services in September. Now, central to the latest easing of business activity growth was slower inflows of new work. While still solid, the rate of new businesses growth was the weakest in 3 months. This was due to both a slowdown in services in new businesses expansion and a renewed fall in goods and services order. Now, I want us to go through the comment. This is the comment from Jingyi Pan, who is the Economist Associate Director at S&P Global Market Intelligence, whereby they did mention September's S&P Global Flash Australia PMI data reflected that businesses' activity growth softened at the end of the third quarter. New businesses growth slowed after 2 strong months of expansion, with manufacturing new orders notably returning to contraction as the negative impacts of US tariffs did set in. Keyword here is returning to contraction as the impact of negative US tariffs have started setting in. Now, when you look at Australia, Australia do export quite a significant amount of agricultural products. When you look at vaccines, when you look at airplanes, and most of the things that Australia produces, the United States is a big consumer of such. And as a result, we are going to see these have an impact on the markets. Now, tariffs were set in place in January. The markets didn't know how we are going to react to it, and we are starting to see the effects currently at the moment. Now, this is going to be passed to the end consumer, which is going to increase inflation, because something that was being bought, let's say, for example, at 10 Australia dollars, if they're going to impact a 10% tariff, it's now going to cost 11, which is quite significant when you're looking at these products. Now, that said, it was positive to see job growth continuing at a solid pace. That was a little change from August. Meanwhile, selling price inflation remained at a level that was above the long-run average, while the steep hike in manufacturing costs inflation pointed to margin pressure for goods and services. Now, very interesting to note, and we are going to look at the charts. How did this information affect the Australian dollar at that particular moment in time? Now, going back to the economic calendar, we did receive data, which is the GDP for Netherlands, earlier today at exactly 7:30 a.m. in the morning, whereby the previous number was 1.5. We were having a forecast of 1.5. The data actually came in better than forecast at 1.7%. Okay. Now, when you look at Netherlands have a weight of nearly 5 to 6% in the euro. So whatever is going to happen to Netherlands, 5 to 6% of the euro could be affected. Now, looking at it, GDP has been improving ever since the lows that we did have during the COVID region, the pandemic region. We did see the markets tank to the downside. GDP went actually to the negative side, but we started seeing upticks. We had a correction from 2022 to 2024, but currently at the moment, the markets are picking back up. And this is what you'll want to look at whenever you're trading such assets. Ask yourself, yes, I want to look at the euro, but what is happening on a macro level to these countries that constitute the euro? In this particular case, we have seen the GDP for euro gain to the upper side, which has come out better than positive at 1.7. Now, that was for the quarter. This is the year-on-year release for the quarter 2, and then we did have the quarter-on-quarter release for the second quarter of the year, whereby once again we have been seeing the economy generally rise to the upper side, whereby if you click on read the official report, it's going to open a new tab for you, whereby this is the official document that was released by Statistics Netherlands, whereby according to the second estimate conducted by Statistics Netherlands, GDP increased by 0.2%, and in quarter 2, 2025 relative to quarter 1 of 2025, according to the first estimate published at that specific date and time. The second GDP is always published around 85 days after the end of the quarter. Now, economic growth was 0.1 percentage points higher than the first estimate. This is mainly due to the upward adjustments in household consumption. The trade balance and investments have also been revised upwards, while public consumption has been revised downwards. The increase in GDP in the second quarter of 2025 is mainly attributable to investments. Very interesting. Public consumption and household consumption also made up positive contribution. So looking at it ever since 2021, we have been seeing GDP, which is seasonally adjusted, rise to the upper side. Currently, we are trading above highs that was made back in 2022. Now, this is what you'll want to look at in an economy. If Netherlands is going to do well, if most of these countries are going to do well, it means that if you look at euro, you anticipate more long opportunities as a result. Now, going back to the economic calendar, today the highlight of the day, before this session does end, as per the time of recording, we are going to receive manufacturing PMI. As you can see, this is high impact, high impact. This is from the Germany region, whereby we do anticipate their manufacturing PMI, which once again is the Purchasing Managers Index, which is a leading indicator when you're looking at this data, which is going to be released in the next 14 minutes. Now, we do have the manufacturing, we do have the services. Once again, if data does come out above 50, it means that the economy is generally expanding, and that's what you would want to look at. Now, when you look at Germany, Germany has a large share in the euro, almost 30%, and this is what you would want to look at. If the data comes out positive, it means that yes, the euro is generally expected to do well, meaning for you as a trader, you would want to look at buying opportunities on the chart. Now that's going to be in the next 13 minutes. Then in the next 43 minutes, we are going to have a consolidated data for the services PMI. So all of the countries in the Eurozone, whereby they are going to consolidate the numbers, and then the data is going to come out for the entire Euro region. Now, previous number stands at 50.5. We are forecasting 50.5 also. The actual number has not yet been released. So at exactly 11 a.m. today, we are going to have this data coming in. Not only that, we are also going to have PMI data for the British pound, which is going to come out in the next 1 hour, 13 minutes. Now, once again, this is very important, whereby PMI, which is the Purchasing Managers Index, is going to look at leading data. How are companies, how are the manufacturing sector, how is the services sector faring on currently at the moment? Now, if the data comes out positive, so today is going to be very active for the Eurozone, the British pound, at exactly London session, which has begun 1 hour, 18 minutes ago. And you would also want to look at, towards the end of the day, we're also going to receive services PMI and manufacturing PMI for the United States dollar. Very interesting. We will want to look at also what the United States has in store for us. Now, looking at the previous number, we do have 54.5. We are looking at a forecast of 53.9 on the services prelim for September. The actual number has not yet come out. Now, looking at the United States dollar, yes, we can argue that employment numbers have been coming out low. Actually, this is the first time in 4 years whereby we have seen employment numbers come out well below 100,000 for 2 consecutive months. But economists could argue that, yes, we have been seeing low employment numbers, but the GDP has been moving to the upwards trajectory, which is good, whereby the economy generally is seen as expanding, even though people are losing jobs according to the data. Now, the S&P Global Services Purchasing Managers Index, released on a monthly basis, once again is a leading indicator gauging businesses' activities in the United sector. Now, the data is derived from surveys of senior executives at private sector companies from the services sector. Now, survey responses reflect the change, if any, in the current month compared to the previous month, and can anticipate changing trends in official data series such as GDP, industrial production, employment, and inflation. Once again, data above 50 is seen as expansion, while data below 50 is seen as contraction. Now, after all the PMI data has been released, we are going to have Fed Chair Jerome Powell release his speech. Very interesting, which is going to be in the next 9 hours, 15 minutes as per the time of recording. And we would want to listen to what he has to say. Now, one of the main mandates of a central bank is to offer forward guidance. Where do you think that the economy will be headed to in the near direction? As traders, this is very important because it will help you align with the longer term trend, especially if you're a swing trader or a day trader, whereby you'll want to be following the trend more. You will want to listen to the tone that the head of the central banks do have. If he does say that, okay, we are due to expect more interest rate cuts in the near future, you anticipate a weaker economy in general, which is going to take me to the Fed Watch tool. Now, as you can see here, the next FOMC meeting is going to be in the next 36 days, 10 hours to go, whereby currently at the moment, the target rate is between 400 and 425 basis points, which is a 10.2% chance we are going to have interest rates at that particular point. But there's an 89.8% chance that we might see interest rates being taken even further down in the next 36 days. Now, this is going to be very important. Why? Because as per the result of Jerome Powell's speech later on in the day, we are going to look at how this data is going to change. Is it going to increase to the upper side or is it going to lower? to the downside. If there's going to be an increase from 89.8, and I would want you to look at this data later on today after the Fed chair does a release speech, whereby we are bound to receive revisions on these statistics, whereby there is a probability that we might see interest rate cuts in the next 36 days. If we do see an interest rate cut, it means we are anticipating a weaker dollar. Meaning, if you're looking at gold, there's a high probability it will continue moving further to the upper side. Now, this brings me to the next segment that we have just started recently. What are some of the assets that you would want me to be looking into? Okay. Share with me in the chat box. As you can see, we have over 332 assets that you can trade with on this server, only over 300 assets. It's not possible for me to analyze all of the 300 assets. But if I was to start with the big ones, the ones that we traders like to use mostly, whereby we have been seeing gold rise to the upper side. We did form high highs, high lows. We have just broken the most recent all-time high recently yesterday, and now gold is trading above 3,752 currently at the moment as per the time of this recording, whereby we did have this massive candlestick which broke this region that did form, and this was a specific candlestick that did form last week on Wednesday. And this was the result of Fed Chair Jerome Powell's speech. When he did speak, yes, he was like, we are going to have interest rate cuts. The market shot to the upper side on the initial release, but afterwards the market started retracing down, especially during the speech when he started. And he was more of like, this is going to be a risk management cut, and the markets digested this data positively, especially on the dollar aspect, whereby we were anticipating interest rate cuts, but he did mention it's not going to be as aggressive as we thought it will be. Markets retraced to the downside, formed support around the 3,627 region, but towards the end of Friday, the markets closed around $3,685 an ounce. Now, when the markets opened yesterday, we did see rallying to the upper side, and we would want to listen to his speech today after the PMI data does come out. Looking at gold currently at the moment, if I was to go down to a 15-minute time frame, we are currently consolidating, whereby the markets are neither making clear higher highs, the markets are neither making clear lower lows. So if you can look at it from this perspective, markets are ranging in between this zone. Now, if the data does come out positive for the dollar later on in the day, we do anticipate prices of gold to continue moving further to the downside. If we do break 37.80, this is 37.38, 37.39 region, there's a high probability prices will continue moving further to the downside, possibly to come back filling inefficiencies that we do have residing. If I can pull a Fibonacci from yesterday's opening price to the highs currently at the moment, I would want to look at prices coming back down to this interesting region here, whereby we did form support. This was the most recent support yesterday that was formed for prices to move to the upper side, and this coincides in between the magical retracement region, which is in between the in between the 50% region and the 61.8% region. If prices do come back to this region, I would want to look at more long opportunities on gold moving forward. Now, looking at silver, we have been seeing institutions buy more into silver, especially on the commitment of traders report, whereby as per last week from 9th of September till 16th of September, we did see institutions add, and then they massively offloaded their positions. So from 9th of September till 16th of September, we did see institutions add positions, then they aggressively offloaded the same positions. Now, institutions do this because they want to get cheaper prices for them to buy more. Now, as you can see, prices did come back down to the 41.240 region. This is an ounce, so this is $41 an ounce on the silver region, whereby we did have a very interesting region of support being formed on these lows around that particular region, and then silver continued to move to the upper side, and we are currently trading at all-time highs around $44 an ounce region. Quite interesting. No one knew we could reach these prices, and the question begs currently at the moment, could there be more where this came from? The ceiling has just been broken. Now, when the ceiling has been broken, when the sky has been reached, where could be the next target? And this is what we're going to look at after the data is released later on in the day, whereby once again we do anticipate PMI data coming in for the United States dollar, and then we are going to have the Jerome Powell speech later on in the day, whereby we want to listen to his tone. Are you going to see, we want to listen to, are there going to be more interest rate cuts in the near future, or are we going to hold rates where it is currently at the moment? Now, that is going to affect prices very, very much, very, very much. Now, once again, I've just started a segment. Which are some of the assets that you would want me to look into? I would want to look at Australia dollar, very interesting to note. Now, this is on the 4-hour time frame, whereby as a result of the speech last week, prices did break to the upper side but closed aggressively to the downside, and then we have entered into a period of consolidation, whereby if I can switch down to the 1-hour time frame, currently at the moment prices are consolidating for a quite amount of time. If I can pull up for the past 64 hours, prices has neither made clear higher highs or clear lower lows, whereby we have candlesticks with larger shadows and smaller bodies, implying that there is low volatility in the market. But for us as traders, this is good because the markets usually move by impulses and correction. So currently at the moment we are correcting. Could we see another impulse later on in the day at exactly New York session? So looking at AUD USD, currently at the moment the Australian dollar has closed its doors, meaning the United States dollar, when it does open during New York session, it's going to have a very big impact on this asset. I would want to look at USD JPY. What is USD JPY? Okay, so this is dollar yen. Now, once again, the Japanese economy is expected to go to vote on 4th of October, whereby they're supposed to bring in a new prime minister, and this is going to affect prices. Why? Because when you look at the biggest forex participants in the market, the number one forex participant is central banks. So the prime minister who's going to be appointed is going to have an impact on Bank of Japan's policy. Okay, now the central banks are independent of politics, but it is the politicians who appoint these people into power, and they usually do have an effect or an impact on their decision-making process, similar to what we have been seeing with Donald Trump and Jerome Powell of late, whereby Donald Trump has been pressuring Mr. Jerome Powell to lower interest rates aggressively, because he does feel there's no inflation in the United States and the economy generally is doing well. But Jerome Powell has had an interaction, and it has been quite interesting to note how the markets have been reacting to this data. So looking at dollar, yen currently at the moment, once again, we have been consolidating for quite some time, ever since we did form these highs last week on Wednesday. That was Thursday, whereby just after the speech for Jerome Powell, we did see prices enter into a period of consolidation once again for more than 64 hours. Now, similar to what we have been seeing on the Australian dollar against the United States dollar, whereby the markets would want to wait for the next trigger for it to move. Whenever you're looking at macroeconomics, you just ask yourself, it's very simple, but it's very easy to complicate it. Ask yourself, is the market going to buy or sell as a result? Now, that's going to be USD JPY. I would want to wait out for confirmation, either prices breaking to the upper side or to the lower side. We do have highs forming at around 148.358, and then we do have these most recent lows that are currently around 147.190. If we do break to the downside, I would want to see prices coming back down to these regions here. Very interesting region. This was the last candlestick on this downward move, and this was when Jerome Powell released his speech last week. He's going to speak again today, meaning we might anticipate similar volatility to what we saw last week. As a trader, once again, we do react to prices. We don't push prices. Now, looking at indices, whereby we do have S&P 500. The S&P 500, ever since the Asian session, has been consolidating. But looking at this price action, and we did talk about this yesterday, whereby if you're anticipating a bullish candlestick to form, you first wait for Monday to form the high or the low of the day. Now, looking at this specific region here, S&P 500 opened here, prices moved to the downside, but it reached this particular moment here. Just after New York open at exactly 1500 hours, we had this doji candlestick form. Then the subsequent candle that formed came in with volatility to the markets. And you're asking yourself, okay, I'm looking at a bullish trend. If you look at the S&P 500 on a larger perspective, it has been buying to the upper side aggressively. And you ask yourself, what are the chances that today is a Monday? it's gone down to form a low. If I'm looking at the 1 hour time frame, but I'm picturing the higher time frames in mind, what are the probabilities that this candlestick will flip bullish by the end of the week? As once again, as you can see, prices moved to the downside, entered a period of consolidation, and then we had volatility come in after New York Open. Now prices continue to push to the upper side, then the markets entered into a period of correction. Now the markets once again moves by impulses, then corrections. Now whenever you see a correction in the market, this is very good because it shows you that the markets are gearing to do something, which for you as a trader is the perfect time for you to align yourself with, should I be looking at buying opportunities or should I be looking at selling opportunities? Now looking at it currently, for at the moment, we do have PMI data coming in for the services and manufacturing. When you look at the S&P 500, these are the top 500 companies. So the data that is going to be released later on today is going to affect equities very, very much, because this data is derived from these equities. If we are looking at the S&P 500 and the PMI comes positive, it means that the companies in the S&P 500 are doing well. If the data comes out negative in the PMI, which means that these companies which constitute the S&P 500, which are the top 500 companies, it means that these companies are not doing well. As a result, you're going to anticipate selling opportunities. Very simple, very easy, but yet easy to complicate it. So that's going to be it for me. Let's look if we do have any questions. Hello, Brian. STI. Beautiful. How do I get a job at HFM temporarily? Affiliated. There is, go over to LinkedIn under HFM. We do have the current openings posted over there. Okay, if there are no questions, that's going to be it for me. Stay safe, take care of yourselves. Once again, risk management is going to be very important. I shall see you in the next segment, which is going to be tomorrow at a similar time. Take care of yourselves.